Good afternoon. This is Tom Alexander. It is May 27th. It is Monday, May 27th. This is the weekend report for this long 3-day weekend. Happy Memorial Day. And we find ourselves in a really odd place from a structural perspective, maybe a very familiar place from an analytical perspective. And that place is all too familiar lately. And it boils down to this. I really don't know what's going on here very short term. And I don't see how anyone can, with any certitude, tell you what's going to happen in the next 2% move in this market in the U.S. stock indices. So let's take a look at the charts, and I'll explain what I'm talking about, and we'll talk about what could clear that up. So let's take a look at the screen here. And what you see on my screen are the four primary U.S. trading indices, the cash markets. And there's several things of note here. We have this divergence of depth of retracement among and between the indices. The Russell declined off the most recent pivot high about 3.5%, the Dow 2.65%, the SPX 1.62, and the NDX 1.88. All of that occurred in the SPX, the NDX, in one day last Thursday. And then on Friday, we had a gap up and a gap and run higher on extremely light volume. Now, it's really unusual, in particular, to have the Dow this out of sync with what's going on in the SPX and NDX. And the reason is very obvious. The reason is because of NVIDIA and 3 or 4 stocks that are levitating the SPX and the NDX that the Dow did not benefit from. But on an intermediate term basis, when you just don't have sustained trends in the U.S. indices and such disparate activity. Now, this is certainly not the first time I've said this over the past year or two. It probably won't be the last. It's a hallmark of this rally that we've seen really for the past couple of years. This is the most pronounced. This divergence has been maybe since the April low. Well, I think it is since the April low. And it's not going to continue. Now, Friday was just so bizarre. We had the SPX and the NDX gap up, never closed the gap, and closed near their highs. Then you had the Dow late in the day, relatively late in the day, make a lower low and close near its low. So this will be resolved in the fullness of time, but I don't have a high comfort level when I see this much disparity among the indices. So let's just take them one by one. This is the SPX. Now, something else, and I'm going to show this, I'm going to show the profile view of this in a minute. In the last 8 trading days, the SPX has a net change of 0.06%. I think it's like 3.5 points from the close on the 15th of May into Friday's close. We've changed 3.5%, less than 4 points. It's just unbelievable. So this is very tightly coiled. Now the range is rather wide because of Thursday's bizarre trade that was a part of the NVIDIA mania that's going on. You can also see how close in such a close area these closes are over the past 8 days. So 7 of the 8 closes have been in a 24 handle range. That, again, that's just showing you how tightly coiled this is, even though the range is artificially extended by the gap on Thursday and then the subsequent drop into very near the close on Thursday. So a very, very similar picture in the NDX. You can see here now the NDX is retraced all 3/4 of Thursday's decline as we head into the cash session on Tuesday. And then if we look at the Dow had a narrow range. This is what I thought I thought all the indices would probably do something like this. I thought we would have, when I saw that we were going to gap up, I thought, okay, well, that'll be close to the high of the day. We'll have a narrow range day and we'll close, somewhere near Thursday's close. Well, that's the way it happened in the Dow, but nothing like that in the SPX or NDX. And then we have the Russell. Now, the Russell showed a little bit of life, but you can see at its low on Thursday, it was about 3.5% from this most recent pivot high off of this April low. Okay, now another way of looking at this, if we look at the profiles. Now, this is each one of the profile units is 1 day of trade. This is a market profile graph. So this is last Thursday, Wednesday, Tuesday, Monday, Friday, Tuesday, Monday, Tuesday, exactly. But you can see the overlapping value. You have a high volume node here, high volume node here, lower here, higher here, lower here, higher here, lower here, lower here. And we closed on Friday right at the midpoint of the high volume node for Friday in the cash market, and very close to the midpoint of this entire structure that you can see has basically resulted in the market going net nowhere. This was the close on the 15th, and this was Friday's close. So you can see the market has really done nothing. So what is it going to do? I don't know. It's, if this market catches on fire and if the Dow were to confirm new highs in the NDX and the SPX, that would be very bullish. The either and or the SPX and or the index could trade to a new high, and maybe the other one doesn't, and you set up a divergence and a larger decline. So there are all sorts of scenarios in play here. We're in the summer. We had extremely light volume last week. We're probably going to have very light volume next week. So it's an odd market. By the way, if you want to get a written copy of this report, you can pick it up at the website, alexandertrading.com. Go to weekly updates, click on the date for today, and you'll see there's a PDF available, and you get these charts and comments that I've been making. But there are times, and I put in this report, from a trader's perspective, there are times where you just have to sit back and say, I don't know what's going on here. I'm going to sit back and let things clear up. Now, obviously, that depends on the time frame you trade. If you're trading intraday, if you're patient, something will usually set up. If you have a trade plan and you know what you're looking for. But on an intermediate term basis here, the picture is at best partly cloudy. Okay, let's take a quick look at a technical situation. Two things I want to point out. Okay, VIX. VIX crashed over the past week or so to multi-year lows. We haven't seen lows this low in VIX in years. And we had a little bit of a blip to the upside on Thursday. VIX declined close to its low, earlier low in the week on Friday, and that's where we are. Now, as far as the technicals are concerned, this could have marked, and I put this in the report, this was a peak in the 10-day moving average of NYSE advancing issues. That could be an intermediate term momentum peak, which by no means implies the market won't go a lot higher. It can go a lot higher. The last time we had a momentum peak occurred, similar to this, occurred back on 12/27, and look how much higher we traded before we got any semblance of a retracement. So it just suggests that this was a momentum peak. There's no other takeaway from this that I think we can have. Okay, that's it for this weekend, guys. We're just going to have to wait a few days to let things clear up. I hope you guys enjoy the rest of your weekend. I'll speak with you very soon.